Hello guys, in this video I will show you 10 things you can do to make a successful account. It means you think, for example, that just you know where to buy a stock or when you sell it, it's all what you should learn. This is false, because this 95% of people, of beginners, they lose their money. It's not just they don't know how to trade, but there is a bigger than that, which is they don't know how to manage their account. Okay? So there are a lot of things you should learn. It's not just when you buy, when you sell, you put stop loss, or how to follow the trend. Okay? There are other things that you should learn. And this is what it makes the difference. Okay? So let's go to the first one. So the first one, divide your account into many positions. Okay. A lot of people, they say, why? Why should I divide my account into many positions? Okay. I just buy and sell whatever I want. If I have 10,000, sometimes I put 5,000, sometimes I put 2,000, sometimes I put 10,000 in a stock. What's the difference? The difference has a relation to the risk into the account. When the positions are equal, the risk is minimized compared to when we have a big position. So for example, you have $10,000. Okay? Just an example. Don't say this will never happen, because it happens each day. Because some people, they don't imagine. They say, oh, I have been trading for 1 year. I have never seen a gap down. Yes, you will see it. You will see it in the future if you continue. If you don't wipe your account and get to the working life, as they say, which is to get a job and to work. Okay? So let's say you have $10,000. You don't want to put positions or mini stocks. Okay, you buy a stock. It's the earning dates, you don't see it. Just you buy a stock today and you don't know. What if tomorrow the stock has a gap down and you lose 70% or 80% or 90%? If you say it doesn't happen, just 2 weeks ago, I have one of the YouTube subscriber, and he bought an ETF that it is 3 times the profits. It means what we call X3. He doesn't know what is it, and he has never seen what is it, and he thought that it is just a stock like any other stock, but it is not. It's not a company. It is just an ETF that tracks futures or something. It's so volatile. The next day there is a gap down and he lost 90% of his money. What do you think if you put all your money, 10,000, in a stock? Next morning, you get 90% loss, and then you get only 1,000. What do you say? Do you begin to whine and to say that, oh, Wall Street have taken my money, oh, there shouldn't be a gap down, oh, there are manipulation in the market, and you begin to cry like a girl? Oh, there are girls that are better than boys. I'm just saying girl because it's like a girly thing. You begin to whine, you begin to cry, and this is here. I'm teaching you not to be like that. Okay, to be a strong, independent trader, knowing what you are doing. And this is one of the things that you should do in your account. And if you don't believe me, in the future you will get it. And you will send me an email. You say, oh, Karim, I didn't take your opinion. I just bought one stock, and it could be even the company go bankrupt after that day or something, but you don't know. Because these things, they don't announce. Okay? They don't announce that they will bankrupt. No, the bankrupt is a news. When it comes, it's over. The stock is taken from the market. When there is a gap down, you can't see it. It's at night, or it's in the beginning of the morning. You were sleeping. You don't know what's going in the market. And even if you know, you wake up at 5 o'clock or 6 o'clock. You can't even exit, and it's over. Okay? So The first thing, as I told you, is to divide your account. Now let's go to the second point. Add and save money to your account. I will explain that because a lot of people they have a naive idea about trading business. Naive, it means they are innocent. They don't know what's going on, and they don't know how the wealth is made. Okay, the wealth is not made to have $500 and then someone tells you that you will have $1 million after 1 month or two, or 1 year or two. You are so naive. You don't even understand what's going on into the account, and in real trading what did happen. Okay, so understand that. So what does it mean, add and save more money? Since you have the idea to make a business and your account should be bigger and bigger, don't think that becoming bigger means only that you make a profit. This is a false idea. Okay, this is a false idea. The right idea is your trading account, you should always, each paycheck or each salary or each 2 months or 3 months, you put more money into your account. Your account should be bigger and bigger and bigger because you need it when you know how to trade. Because when you don't know how to trade, you have $500 or 100 or 5,000, 10,000, it doesn't matter. You don't know how to trade, so you can't make your account become by profits. You can't, because you are a beginner. You need to have a training and to practice until you get these skills. Now, when you get these skills and you know how to trade, what will be the problem that you face in that stage? You need money. Okay? And since your account is small, you force it, but it is small. Okay? You can make money, yes, but don't think that you can make billions of dollars from $100, as the people say. Okay? So, and this is your idea in the future. Even if after 10 years you save money, you trade, whatever is your account, you can at one time, if you need your money, you take all your money from your account and it is your money. It is like you saved, you invest, you trade, a lot of things happen together, and then you make a big account. I understand. A lot of people, they can't make it. They can't, but put whatever you can. Okay? So the idea is to be consistent in saving. This idea is very, very important, because let's say this year you have only $2,000. If next year you have 5,000 or 6,000, you save more money, it's good. If you have 10,000, it's better. 15,000 is more better. 50, 100, 200,000 dollars is better, because the more it is bigger, the more you can buy more stocks. You can buy the big stocks, some stocks that are moving $10, $20 a day. You will not find these stocks in smaller stocks. Okay? And you can buy whatever you like. You are not going to be stopped by the limit of the money that you have. Okay? So hope this idea of adding money and saving will be very accurate for you. Now, the third thing I want to speak is calculate your commissions and fees by month. Okay? Commissions and fees. So I will try to give you an idea. When we say calculate your commissions and fees, it means you should make a plan how much your expense is. There are a lot of people, they just trade. Okay? They just buy and sell. They don't know how much is the broker taking from their money. Because the broker, because he is intelligent, he is from Wall Street, those people who don't do any risk, but they take money, when he takes the money, he tries not to show you this expense, to show you what does it mean. It means you see it in your broker. Go to your broker. Try to find where is how much fees you made in 1 month. You will never find, except if when you call and they say we don't know, you should calculate by yourself, and they begin to give you excuses. They can't do that. It's very easy, since they take your money each when you buy or when you sell. They take money, okay? So they calculate this very good. But why they don't put fees and commissions aside and then you see them? Because this psychologically it will stop you from trading a lot. And this is called in the business of brokers what we call conflict of interest. Understand that the broker wants you to trade day and night. The more you trade, the more he makes money. The more you use his margin account, the money, it means the more the margin account money, he will be making interest rate 6% or 10% or 5% depending on the broker. So he is not here to risk anything. You risk everything. So since you are doing a business and this is for the future, you want to stay 5 years, 10 years, 20 years trading. So from now, you should make a plan, okay? And this plan is based on how many fees and how many commissions you do. Understand that you buy a stock, it's 2 transactions. You buy and you sell. So it is, let's say it is $5, so it is $10. Each time you buy a stock, it's $10. Understand that you have a small account with 1,000, 2,000. If you do 20, 30, 50, trades on the row, 1 month or 2 or 3, your money is gone. But you don't know why your money is going out of your account, and you don't even think about commissions and fees. A lot of people, they are using especially another thing, margin account. Those people who use the margin doing swing trading or whatever, and they stay many days, understand that some brokers the interest rate is very, very high. I see some, they ask 10%. Okay? They ask 10%. And it is too much money, 10%. Whatever you made, 10% is too much money to give in your for your margin account. So if your broker is asking too much interest rate and you are using interest rate a lot, it means your margin account, you are using it a lot. So try to think to change your broker. There are brokers that they give you 5% or 4%. Before they give me 1.99%. Before, but I don't use it. You see, it's a big trouble. So you should take care of this. Now let's go to number 4, which is something very important. Okay. Make 2 different accounts, trading and investing. A lot of people, they have no idea about this, but I will just try to explain. Since you are doing business, you are thinking about the future. You are not thinking about just now to make $100, $200 or next week or next month. You are thinking about 5 years, 10 years, 20 years. It means you are trading, you are making money, so it's good. Okay? So you should differentiate always between trading account and investing account. Investing, it means you stay more than 1 year and you should leave it for stocks that you own. It's your investment for many years, or 10 years or 20 years or 30 years. You like the companies, they are good. Each year you are making money from them. So why you sell them? So this is the idea of investing. Investing is an investment that it is good, it gives you money. Why you sell it? But try to look at the 1 year. Don't look for investment. You say, oh, I invest in a stock, in a company for 10 days. This is not investing. This is what we call trading. These 2 words, you should separate them and you should understand what they mean. Trading is when you do day trading or swing trading, which is short-term trading. 2 months, 6 months, 8 months, 9 months. All these, or day trading, like each day you trade. All this is called trading. Why? Because your money, when you make a profit, it goes to your income and becomes an income. So you are taxed more. Now, the account of investing, since you are not selling in 1 month or 2 or 6 months, you are selling more than 1 year, 2 years or 5 years, 6 years or 10 years, or you don't sell, never sell. This, if you sell, it gives you only, the tax is only 15%. So you understand that these two accounts should be separate. And don't mix them. If you want to do investing, make another account, put money, especially if you are doing Roth IRA, for example, you don't pay tax. So you just put this, buy shares and leave them there in their account. Each time you have money, you just leave, buy and leave. And after a few years, you see that you have an investment that it is growing and growing and growing according to the market, according to the industries, according to those stocks. Okay? So if you are just looking for trading, it's okay. One account is good. But for me, I'm trying to think about you guys, about all the people that are watching me. I don't know if they are day trading, swing trading, or investing. So I give you a general idea, and then you try to see which is good for you. So the number five, calculate trading account risk. Okay, calculate trading account risk. Now, this idea about calculating trading account, the whole account, is different from calculating the stop loss of a stock. It has nothing to do with it. It has nothing to do with a stock. You are thinking about the whole account. Okay? Now, one of the major things that you should do is when you put stocks into your account, these stocks or these positions should be equal. What does it mean, equal? It means, let's say you have $10,000 and you want to do 5 stocks. So each stock is 2,000. Don't give more. This is how to control risk. It's not because you like a stock, or a guru told you to buy a stock, or you see Warren Buffett say, I will buy this stock, you go and buy it. No. And you put all your money and you think, oh, that guy knows better. No, don't do that. So the main thing is try to keep account positions equal. If you sell, if your money grows more, you should divide it always. For example, you divide it by 5, you should continue with 5. Okay? Let's say your account is 10,000 and you make 5 positions or 4 positions, it depends on you. So each stock should have the same equal amount of money for each stock. Either the stock is bigger or smaller, don't worry about this. The main thing is to make equal, and this will stop you from having high risk. Now, from where it comes, this high risk? It comes from playing with positions. Playing with positions. A position you put $10,000, another position you put 1,000, another position you put 5,000. This is playing with this. That's why your account will be very volatile. It goes up very good, goes down very good. So it will be, the chart of your account will be too bad. And I don't think that you will succeed in making money like this. Okay? So, now number 6. Number 6 is never add shares to a loser. Okay? Never add shares to a loser. What does it mean? We have said that there is a rule. All your positions should be equal. Let's say I give you a simple example. $10,000, you divide it in 5, you have $2,000. Now, if you buy a stock at $2,000, okay? And this $2,000, because the stock is going down, you want to add to it. This is too bad. This will spoil the good risk management that you do before. Before I told you, let's say $2,000 for each position. If you have 10,000, no, this is just an example, okay? It's not a rule. Because there are some criteria that you should know how much you devote this. So this is we have more details in training level 8, how to minimize risk and maximize profits. So I'm not giving all the details about that, but what I tell you is $2,000, if the position is a loser, what does it mean? It means you are losing money. And most of the people who lose money, they are scared to exit because they see, oh, it is a realized loss. Because something is funny. One guy, I was just making a video about not to add to a loser, and someone told me, oh no, if you don't sell, it is not a loser. I told him, okay, if a stock was $50, now it is $2. You are not losing anything. Okay, stay until 5 years or 10 years, until the company goes bankrupt, and then it is realized, and then you go to the company and you said, where is my money? Now there are some people who don't understand the price. Man is what you see. For example, for me, if I buy stock and I get a gap up, I get $10 or $15 or $20 gap up, it's a lot of money. I see a lot of money. Did I say that it is unrealized? No, it is. I see it. I took it. Okay, it is money that you see of the price. So if you are losing money from a position, just exit the position with a stop loss always. Don't leave it. If you leave it, it goes down and down and down. It will become a big loss. When it becomes a big loss, you will get hurt. Your account gets hurt too much. Okay? So number 7, which is check your trading account frequently. Okay? Check your account frequently. Now, why I ask you check your trading account frequently? It's not only with positions. For example, you have 5 positions. You say, oh, I go to my positions and they are okay. No, I'm not speaking about that. Speaking about the history, about the orders, how the orders have been done. Are they correct? Yes or no? If you see anything that it is strange in your account, fees, or you see something else, or you exit a trade and you don't put stop loss, or something like that, or you see some fees that it is in your account and you don't know even from where this fees comes, please take each week or each 2 days or 5 days, whatever is your plan. Go to your account, check the history, 10 years, 15 years, what did happen? Check your orders, check your positions, are they good or not? Okay? So it means just a check. This check will get you an idea about what you are doing. Second thing, you can see year to date or monthly to date or day to date profits. Because sometimes you open your account, you see all your account is green. You are making money that day. Because the broker has a good thing to show you only the day, because days a change. One day you lose money, the other day maybe you see you are making money, but you should see each trade by itself, how much money you lose in general in that trade. Not just today. Today they show you, oh, you make $200. Today is good in the whole market. But this trade you are losing $500 because you have lost $700. And today you make $200. No, they show this green $200 as if you are making money. But in this trade you are losing a lot of money. So understand this thing. You should see the monthly performance. Are you making money or losing money? If you are losing money, it's red. Try to go and check what is wrong. Is it your position sizing? Is it your stop loss? Is it the stock itself is not good? It is the news. What is it? I know this. Some people, they get frustrated when you ask them to go to their account. I understand. But this is a business. If you want to stay in the market, you should look for all this stuff. Okay? If you want just to play and to do it as a gambling, it's okay. Do whatever in your account. No one will ask you whatever. So this is very known. Now, number 8. Never get a tip on a stock. Understand that getting tips on stocks is a very, very dangerous thing. Okay? Some people are just beginners. Some people are just naive. They just put stock. Oh, I have bought Facebook. And it's a good stock. And all the people they buy, and then when you buy, it begins to go down and they lose a lot of money. So stop getting tips from people, whatever all these people. Even if he is a guru and there is 100 million following this guy, don't follow people selection of stocks. It's better that they teach you how to select the stocks. Is better, buy money is better than to get a free selection of stocks. Because when you know why they choose this and why they don't choose that, you will have their training, you will have their opinion, and then you can make your own opinion about the stocks, not following everybody. Okay? Or you find a friend, you say, oh, I have bought that stock at $30, now it is $60, it's a good, buy it now. But understand that when he bought it, yes, it was 30 and now it is 60, but are you aware that you buy it at 60, it goes to 90 or 100? You might not. This stock may go down to 30 again and you lose all your money or 50% of your money. So try to stay away from these tips of stocks. Okay? So we go to 8. Now we go to 9. So 9, never buy by analyst recommendations, and this is very, very known. Okay, a lot of people I know, they follow analysts, but analysts are always, someone says to you hold, someone said to you sell, someone sell. He is not sure. So how can you take an advice from someone who doesn't even buy this stock? Okay, so and number 10, if you are a beginner, stay away from Forex options and futures. So why is that? It is because they have a different risk management into trading. So options are not like futures. They are not like Forex currency pairs. Now, why is that? Each one has a different sets of risk that it is so different from stocks. Okay? Options, for example, you think that it is so cheap, but the risk is 100% risk. So if you don't understand this risk, you will be wiping your account very quick, because you want very cheap things, but the risk is so high, but you don't understand why. You don't understand that it is high at first, because someone told me, oh, one contract of Facebook, for example, or instead of paying $17,000 for 100 shares, I buy it for, let's say, for $2,000. I am okay. It's very good for me. But if there is a gap down or there is something like that, this 2,000, it is wiped from your account. So you will never understand that. And a lot of people understand that when you have you make a bigger account, you will buy more contracts. This is the problem. When it is $200, you buy it, or 100. It seems a little money, but for you, in order to make money, if you buy, for example, a contract at $200 and you make $100, they say, oh, you have made 50% of your money. You become like, you say, oh, this is good. 50% of your money I made just by buying this contract. Why I don't buy 10? Okay. When you begin to buy more and more because your account is 5,000 or 10,000, here is the big risk. You don't understand that all this money, if you don't make it, if you don't go the opposite direction, it will be wiped out. This is the same as when you do buying gambling tickets. What did happen? The thing that happened is that you think when you buy a lot, you have more chances. But whatever you buy, if you don't bring the exact thing, all it is wiped out and all your money is gone. So for me, I'm not saying to you don't trade options, currency, or futures. What I'm saying to you is when you get to that stage of you become advanced student, you can go anywhere and you can do whatever you want. Because you understand risk. Whatever you buy, you understand how much you can lose. Okay? And this is the basics of trading. So for me, I'm trying just in YouTube channel, I'm trying just to give you the basics of trading and investing and swing trading. The details you will find it in my training. Okay, so because each thing has its own risk, its own process, how it is gone. So if you follow these 10 basic things to include into your trading account, you will be successful in the future, because you just begin to understand the business thing about trading. Now you are focused always on how to buy, how to put stop loss, how to follow the stock, the trend, which is very good. That are trading skills. But there are other things that you should take care of, because it is the business itself. It is your account. If your account, you have $1,000 and you don't put more money, you save money for it, so it doesn't move that fast. And if you trade too much, your account will be wiped out by itself, because the expenses are more than the profits. And this in business, if you understand, you should minimize the expenses and maximize the profits. Okay? So thank you very much, and see you next video.